I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycle News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks very much for having me.
The latest indicators: Canada, zero growth in February. The U.S., its lowest economic growth in 3 months in the last 3 years. The first quarter flat. What's happening out there?
Well, Jim, it's funny you mentioned that. I was sitting here waiting on your phone call thinking about what I wanted to talk about going through charts. And I think that ties in, ironically enough, it ties in perfectly with what I wanted to talk about and what I'm seeing. You know, if you back up without going too far back in history, but if you just back up to the '09 low, you know, we all know that everything bottomed in late 8, early 9. Some of the commodities bottomed in late 8, November, December. Equities bottomed in March of '09, and everything bounced together. Everything, when I say everything, I mean literally everything. If you look at, for example, gold, it bounced into the 2011 high, and that was the 9-year cycle top, and it's been down ever since. If you look at, but that was gold, you say, but if you look at everything, I mean, if you look at nickel, I mean, who looks at the price of nickel? I just looked at it. It's the same pattern. If you look at the price of tin or zinc, or if you look at even copper, or, you know, everything has the same basic pattern, and you know, even the CRB index itself, it has the same pattern and is showing, you know, the lower commodity prices. If you kind of overlay the charts, you know, it's not perfect in that everything tops and bottoms to the same day or even the same week or the same month, but it's the same basic rhythm. You know, late '08, early '09, we rallied out of the same cycle lows of the same degree, and then one by one, you know, things topped at different levels. Well, I think what commodity prices are telling us is it's reflective of the underlying economy. And I think the mirage has been equity prices. They've been the holdout. And even more recently, if you look at the late 15, early 16 lows, everything pretty much bottomed there, a cycle of varying degrees. And then in the case of equities, they've moved, you know, much higher throughout 16 and into 17. And commodities have the same basic pattern, but they have failed. They have not performed. In other words, the advance out of those lows has been weaker than what we've seen in equity. So I think that is telling us something, and I maintain that the bubble this time is in equities, and that's caused the camouflage for what's really going on in the underlying economy.
So what is that telling us? What's going to happen?
I think what it's telling us is that I think commodities may be the warning here. You know, if we know everything's moving together, and, you know, coming out of, for example, the November, December lows, let's move forward some. You know, everything bounced. You know, silver made a bottom in December. Gold made a bottom in December. You know, equities made a bottom in December. And everybody was worried about the advance in gold, and was this it? And I said, no, I think it's a counter-trend rally, and we rallied into February, and then we dropped off into March, and then we rallied, made another high. I said, no, I think it's a counter trend, advance. And then, it finally weakened. We saw the same basic pattern with oil. We made a low in November, rallied into the first of the year, and then oil has been it's made a retest in March, April of the previous high, and then it has rolled and softened. So I think what we're seeing is some cracks maybe, and I think commodities are telling us something. We have the stock market at an all-time high. We have the evidence that commodities are starting to roll and crack out of those, the tops, the cyclical tops associated with the cyclical advances. That's getting kind of wordy. We saw everything bottom in January is what I'm trying to say, of this basically the same degree low, and everything rose together, and then one by one we've seen that top that I've been talking about, and we've seen commodities, the underlying or the associated stocks like oil services, the HUI, some of the gold miner stocks and so forth. They have weakened ahead of the general equity market. I think equities are the holdout here. And I think that the commodities are telling us something. How long equities continue to hold out, I don't know, until we get the setup to cap it. And when I say the setup, some very specific structural stuff, intermediate, longer-term sell signals, some Dow theory stuff falls in place. Until then it is what it is. But I think that commodities are telling us something.
We'll have more with Tim Cyclesman Wood right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, is there a relationship between the U.S. dollar and the price of oil and what might happen in the equity markets?
There is a relationship, but, relationships, I try to let each market stand on its own feet. And rather than say that if gold does this, then the dollar has to do this, or if oil does this, the dollar has to do this. I mean, yes, there are some general relationships, but they're not, again, they may rhyme, but they're not perfect. And for example, if you look back in the late 90s, I remember buying, and I don't have both charts open, but I think it was about 1998. I remember buying gasoline for 70 cents a gallon. We made a trip to Texas, and I remember it was December. I think it was 98. And the price of crude oil then, I don't have the chart in front of me, but I want to say it was in the $10 to $12 range. Yet the dollar index was, and I do have that chart in front of me, I pulled it up, was in the 90-95 range in late 98. Well, if you use the logic that, there's a one-to-one relationship, in 2000 and let's say, I'm looking at the dollar chart, in 2000 and, last year, it suggests that oil should have been in the $10 to $12 range based on where the dollar index was. If you go back in time and look at, let's say in 2009, it suggests that the oil should have been in the $10 range, $10 to $12 range. So those relationships, they don't always hold. And that's why I try to let each cycle stand on its own 2 feet. So you got to be careful with those. If this does this, this has to do this.
We'll have more with Tim Wood right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Tim Cyclesman Wood. Tim, you were bang on last year when you said oil would drop down into the 20s. I think it bottomed out around $27 a barrel. What's going to happen with oil this time around? After hitting about $54, it's been on a slide since then.
It has been, and I said that the advance out of the low last early December or whenever it was, I think it was December or January. I think it was January 16. The low was made. I said maybe it was February. I don't really remember. But as we came out of that low, I said that it would be a counter trend advance, and throughout 16. And into early this year, oil did hold up, no question. But I said that within the context of that advance that it was a counter trend, and I still believe that. I think that the general direction now is that we should have that counter trend top in place, and that oil should go down along with pretty much the entire commodity complex. I mean, that's what the charts are telling us now. If you look at the CRB index, it's starting to really confirm that. Now, if something happens with the charts and something changes, then at that time it changes. But right now, I'm sticking to that. I still think that oil, gold, the general commodity complex, all has another trip back down. And with equities here at what still should be some sort of at least a intermediate or slightly longer term top. I think that's going to put pressure on equities, and it sets things up for everything to go down together, and potentially in a bigger way than we can imagine. It just depends on how good of a toehold the decline gets. But that's what we're set up for. Now, that said, once this opportunity, the cycle's bottom, if nothing really materializes, then, all of a sudden the pendulum swings the other direction. And remember, several interviews ago, I said that we were either at, I thought, a 1926 type scenario or 1929. And what I meant was we're going through this crossroads, this technical crossroads, where things are going to have the opportunity to roll, or if they don't, they're going to hold. And then that's going to, in turn, once the cycles kind of clear themselves, the opportunity comes and goes, and everything is status quo, then that's going to give us the opportunity for, I think, for, a 26 type scenario, for lack of better words, where we see another big blast up with everything, including commodities. So I think the jury's still out on that. But as of right now, what I see is pressure with commodities, and I'm still sticking toward, a trip back down with everything, which I think is going to pressure equities.
Could oil again dip into the upper 20s, low 30s?
It could. Based on the chart structure now, the general reading that I get looking at the technicals on commodities in general, I think that is definitely on the table.
Tim, thank you again so much for your help.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Questions for Tim or for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.